From Mint Street to macros, the February retail inflation has come in at 3.65%, and this is in line with street expectations. Now, food inflation has risen to 2% from 0.5% in January. Latha Venkatesh joins us now to analyze this reading further. Latha, what did you make of the numbers?
Well, the inflation numbers have come in entirely as per expectation. The CNBC poll itself was 3.66, and the February inflation has come in at 3.65. At this rate, given that March of 2016 saw a fairly steep fall in inflation, you will still get an inflation number of around 4% for March. So the year will end with a fairly subdued inflation of about 4%. But there are worries on the horizon. Food inflation, as you said, came in at 2%. This compares to 0.6% year-on-year food inflation for January. So as we can see, food prices are ticking up. We are likely to see a further rise in cereal prices. The WPI itself showed a rise in rice prices. This will be combined with edible oil prices and sugar prices as well. We have seen a markup in milk inflation numbers in the month of March itself. So when the March inflation number comes, we're going to see a further uptick in food inflation prices. And if the early signs of El Nino are as they are, we could see a further uptick in food inflation. The market also worries that cost of production, because of higher labor charges as well as higher other inputs, could mean higher MSP or minimum support prices for Kharif food grains, and that could further exacerbate a rise in food prices. So chances are that we are going to stare at inflation going steadily higher, largely pushed by food. Could get worse if the early monsoon forecasts are not very good, and therefore inflation is likely to inch up towards the 5% mark, pushed partly by minimum support prices, partly by possible adverse news coming on monsoon as well. The jury is still out on how food inflation will go, but chances are it's only going to inch up from here on. And therefore, from the Reserve Bank, you should not expect any change of policy. Certainly not any surprise rate cuts. The Reserve Bank has already indicated that, and that is how it's going to be. The best case will be no move from the Reserve Bank. The worst case would be an even rate hike before 2017 is over.
All right, Latha, thank you so much for those details.